Hey you guys, welcome back to the channel. If you're new here, my name's Jeff, and today I'm making a special video because you guys asked me last week if I would show you what I do behind the scenes when I go about picking stocks that make it into my portfolio. And as many of you know, this year I have focused on semiconductor stocks. So everything that I've devoted my energy towards as far as picking stocks has been in the semiconductor sector. Although what I do, I can apply to any kind of stocks in any part of the stock market. So before we get started, this is not investment advice, but I want to share with you how I'm thinking about things because I think this process of learning and sharing what we know and what we understand with each other can make us all better investors. So from educating yourself and becoming a better investor standpoint, I hope you'll use what I share with you as kind of a framework to help you in your future learning. So as we get started here, I just want to show you, I have 7 things that I look at, and these are like filters that I put every stock through. And if a stock doesn't make one of these filters, then I just discard it. It's too much, too hard to understand. It's not going to fit into my portfolio, and then I can just pass on it and then look at something else. So getting started here, I look at the company size. I want it to be between about $1 billion and maybe $8 billion. It could be anywhere in there, 3 billion, 4 billion, 7 billion. The important thing is I don't want to look at stocks that are under $1 billion, and I'm not really interested in like huge mega cap stocks because I want to keep it small. I believe that smaller companies have a better chance at growing quickly. The number 2 thing I look at is the balance sheet. So I want a company that has a strong balance sheet. What that means is that it has assets that are growing, preferably they're building their assets, and the liabilities are not too great compared to their assets. I don't want to get too much in the detail of what this is all about. If you have not yet learned about accounting basics and about balance sheets, I recommend doing some learning and reading about that. But until then, just know that assets are anything that a company owns, any kind of structure, any kind of inventory, their machinery, anything that could be sold and converted into dollars would be an asset. And then anything you owe, any bills that you haven't yet paid, like if you have a credit card bill and you owe the credit card company $1,000, that would be considered a liability. So I'm looking for companies that are building their assets and are keeping their liabilities either the same or reducing them slightly. The number 3 thing I look at is earnings growth. Is the company growing their earnings? I would rather a company that is growing their earnings than one that is declining in earnings. And there are several companies that I look at that don't even have earnings. So these would be companies that are operating at a loss. And I stay away from those. That would be a speculation, basically a bet or a gamble that one day this company will become profitable. But with very few exceptions, I can think of one exception that I've made. I only invest in companies that are profitable and hopefully growing their profits. Okay, number 4 is competition. I want to understand what the competition is in the sector that this company operates. I want to know, is it the top company? Is it the strongest company? Is it the fastest growing? Are they in danger of having some other company come and eat their lunch, take their customers? Or are they the company in this sector that is actually poaching in on some of the other larger companies and taking some of their customers because they're more nimble, they're quicker, they're more agile, they have better technology? So it's important to understand the competitive advantages within a sector and understand where your company that you're looking at fits within that sector. Number 5 is I like to invest in companies whenever I can that have talented leadership with integrity, with intelligence, and that is usually starts at the CEO. If whoever's in charge of the company is smart and they're honest. I really like that. And I think you can get a read on that, although nobody's perfect. Nobody can be a perfect judge of character. But I think that if you do enough reading, if you watch some videos, you can get a feel whether you like them. And also looking at the other people running the company, like the CFO or the COO. The leadership team's really important. So I try to get a feel for the leadership of a company if I can before I invest in the stock of that company. Number 6 is I always think of these small cap investments as intelligent speculations. And what that means is, if you're investing in a small cap company, there's a good chance, this company is going to fluctuate kind of wildly. The price may go up, may go down by 5-10% in a day, sometimes 15-20%. And this is less common with huge like mega cap companies. And this is because they're small and they're very kind of volatile. Anyway, when I invest in these, I realize that, investing in any one of these small, like a $1 billion or a $3 billion company can lead to a big loss over a course of, a year or 2 years or even longer. And so if I just invested in one, then I really wouldn't be very happy as an investor if that stock went way down and I didn't see it coming back, or you know what I mean. But if you invest in a basket of stocks, then that collection, if a few of those, do really well, they'll kind of offset the stocks that don't do as well. So anyways, I just think in terms of how can I make this so that it's taken as a portfolio, I can win with, at least getting 6 of the 10 in the green or 7 of the 10. And if, 1 or 2 or 3 of them don't do so hot, I really am hoping that in the context of the portfolio that the other 6 or 7 stocks will more than compensate. And I learned this from Benjamin Graham, who wrote The Intelligent Investor. And he was Warren Buffett's teacher. And one of the things he wrote about in The Intelligent Investor is that the way to reduce the speculative nature of any stock is to invest in a combination of one. And this is the portfolio approach that I take when I think of number 6, which is intelligent speculation. And number 7 is simplify. Simplify. I like to simplify the portfolio by starting with a large group of companies that I'm thinking about. That's my process. I'll look at maybe 10 or 20 or 25 or 30 different companies, and then I just pare it down as I start to discard and throw away the companies that I don't understand well. Maybe they have a weak balance sheet. Maybe they don't have positive earnings, so they're unprofitable, but I'll just start tossing them aside. Or maybe I'll see the CEO give a talk and I don't really like them, so I'll just say, I don't want to invest with that CEO. And I just discard until I come up with, a small portfolio of, say, 10 stocks, like the 10 semiconductor stocks I'm investing in this year. So those are the 7 steps, and now we're going to get into a little more depth into my investing process. And before we narrow in on just like one company for a little focus time, I just wanted to show you, this is my Robinhood account. I don't actually trade with Robinhood, but I do keep watch lists on there because I like the way they let you kind of follow different stocks, and also I like the charts in Robinhood. So you can see I made up a list, and I did this last year in 2023, of focused 5 for 2024. So I was originally just going to focus on 5 stocks, but I kept adding to it. So if you look at this list, you'll see that it's actually not 5 stocks. It looks like at least 20, 25 stocks. So these were all companies that I was thinking of investing in. And what I did was I would gradually kind of toss some of them out. I have another portfolio here that says not buying these. I just put one stock in, which is, I think, Wolfspeed is what Wolf stands for. Yeah, this is Wolfspeed. And let's see, so far today, this year to date, this is Wolfspeed. I did not invest in this. And then if we, let's see, look down here under that, We've got looking closely on November 14th. I was looking at these stocks. It looks like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I did not invest in all 10 of them. I invested in some. Like I did not invest in Air Test Systems or this one, TEOLY or Wolfspeed. Did not invest in that. And did not invest in EPAM. And what I did here, okay, focused 18. Look at this. I had 18 stocks at one point. And this was probably in November or December that I made this list. Vico, I did not invest in that. Actually didn't invest in any of these. I did invest in this one, Excelis, and On Semiconductor. This is 5 semi stocks. You can see again, it's a huge list. But I pared it down. And oh wait, I think I passed it. Semi stocks 2024. So this is what I finally decided upon. And you've got Synopsys, STM is ST Microelectronics, PLab is Photronics, Onto Innovation, On Semiconductor, Nova Limited, Camtech, Aspen Aerogels, Excelis, and Allegro Microsystems. So these are the 10 that I settled on. But I show you all of these others here because I want you to sort of see this is what I originally am looking at before I kind of pare it all down. And that is the process of the number 7 I mentioned, simplify. It's all about taking a whole bunch of stuff as I'm starting to learn and then narrowing it down. And if you want to know like how I come up with this whole huge list, I'm happy to talk about that. Let me know in the comments. But right now I just want to keep moving and share with you a little bit more of how I focus in on each one of these. Okay, so I'm going to share with you guys just a little bit more detail on one of the companies I mentioned last week that I've been doing a lot of learning about. And this is Camtech, and for full disclosure, I own shares of this stock. And this was the one that I did a lot of reading about, and I also watched the Q4 for 2023 conference call, and I had a chance to listen to the CEO and the CFO and the COO talk about the company. They talked about 2023 and also shared their thoughts about the upcoming year. So, this is available on their website, and just about every company on their investor relations page has their results. Sometimes it's in a call that you listen to. Sometimes it's in a call that you see, like you can watch a Zoom presentation with a slideshow. But in any case, it's a great chance to just hear the leaders of the company talk about the company and about their results over the last quarter, over the last year. And sometimes they'll talk about what they think might be happening in the upcoming year. What I want to say just before I get back, into all this detail is just to remind you guys, this is not financial advice. Just because I'm interested in a company and I'm enthusiastic and learning about it doesn't mean it makes sense for anybody else. But I want to share with you kind of what I saw, what I learned about, so that, again, this can kind of inform you. What matters to me might be useful so that when you look at investing, you can kind of ask similar questions. So when I listened to this earnings call, the CEO, his name is Rafi Amit, and he talked about 2023, and he said that they had a record fourth quarter. They had $89 million in revenue. That was a record for them in the most recent quarter. And they ended the year, the full year, with $315 million in revenue. And he said 2023 sales started modestly. So they started out the year modestly after having a really good year in 2023. It was a record year in sales in 2022. So it started slowly in 2023, but due to increased demand in high-powered computing, HPC, and I want to make sure that I have that term correct. Hey Google, what is HPC?
According to Wikipedia, high-performance computing uses supercomputers.
Hey Google, stop. Okay, so the increased demand from high-performance computing related products in the second half they experienced a significant increase in orders and sales. So the second half of 2023 was much different from the first half for Camtech, and it was HPC orders, or high performance computing. And so that Q4 came in 20% higher, just the last quarter, than the first quarter of the year. Okay. And the other thing that he said was that the gross margin in this fourth quarter, because this really was a fourth quarter conference call, he said the gross margin was 49.2%, which shows continued improvement over previous quarters. So the margin is just the amount of profit when you take out the cost of your sales, so your expenses. So a company basically wants to increase the profit margin because it means that they're more efficient in how much money they make out of every dollar that comes in. So anyways, the last quarter of 2023 was a really good quarter because of this high performance computing. And then what Rafi Amit also said is, he said, we expect this demand to continue into 2024 and beyond. And it has been reflected in our current order flow, backlog, and pipeline. So he said, they have a slide, and again, this is in their conference call. It's online now. Anybody can watch this. He said, we expect 2024 to be a record year, even before taking into account the contribution of sales from FRT. So Camtech purchased another semi company in 2023 for $100 million. So it's taking this acquisition of a company called FRT, and he said that this year, 2024, looks like it's going to be a record year, even without the contribution from any sales and profits from the FRT acquisition. He said, we have strong order momentum. 300 systems were sold in the second half of 2023. And he said that our revenue guidance for the first quarter of 24 is between $93 and $95 million. So fourth quarter of 23 was $89 million. So they're predicting that for this first quarter of 24, they're going to improve upon that, 93 to 95 million, which is a 30% year over year over the first quarter of last year. So, and just giving an overview of Camtech's business environment, he said, our main growth engines are the HBM and chiplets modules. So HBM is high bandwidth memory, and that is kind of a new thing that even 2 or 3 years ago, it was not a big term. It was not like that popular. I'd never even heard about it 2 or 3 years ago. But high bandwidth memory is a big deal in chiplets because they're vital to AI. They're a very important part of AI. So these chiplets and high bandwidth memory modules play an important role in enhancing the performance and capabilities of high performance computing. That's that HPC. So he says that these chiplets and the high bandwidth memory are the cornerstone of growth of HPC in the coming years, and he sees an annual growth of between 20 and 30%. He said Camtech is a strong player in this segment. He said we have a lot of tier 1 customers, and they need to use Camtech's equipment for a high number of metrology steps. So without going further and further into this conference call, you can watch it if you want to. He's just saying that right now, he said this is a quote, we are now getting initial indications that an additional substantial amount of orders are also expected in the second half of 2024. So they're not only predicting that the first quarter is going to be a better quarter than last quarter of 2023, they're saying that even the second half of this year is looking really good. And again, this is all information I'm sharing with you because I think that, this is stuff I found out just by watching this conference call and listening and taking notes. I took a lot of notes. I've been sharing these notes, which I put together, and this is even more detail that I put together, and I just don't have time to share this all on one video with you guys, but you know, it's at least 10 to 15 pages of notes I took, and during the process of listening and writing, I was able to kind of assimilate a lot of new information. Okay, so let me just show you here a couple things. First off, here's Camtech. This is just, again, this is today, and I can click here on the year-to-date returns for companies. This is Robinhood. What's funny is I don't ever use Robinhood on a desktop computer. I use it on my phone, but for doing this presentation using my screen, I thought, well, it's going to be hard to like scroll through on my iPhone and show you guys while I'm making this video. So I pulled it up on the computer. It's like the first time ever using Robinhood on a laptop. But what I'll show you is a couple of the things that I look at. Okay. Here you can see the CEO is Rafi Amit, who I had mentioned. The market cap for the company is right here. It's 3.61 billion. So this is in between that 1 billion and 8 billion that I want a company to be before I'll consider it for investment. And if we scroll down here, you'll see the earnings. Like I told you that I want to see a company is growing their earnings. That was earnings growth, as you'll recall, was one of the items that I look at here. Does the company have earnings growth? So if we look here, you can see Q1 of 2023, the second quarter of 2023, the third quarter of 2023, and then this is the quarter that we just talked about where they made $89 million in sales, 89 million with an M. And, you know, they're, again, predicting or projecting the guidance, I should say, that they'll do even better next quarter. So this is all nailing the earnings growth. And I guess I should just go in order, right? So company size, we already looked at that. That's in the $3 to $4 billion range. Let's look at the balance sheet, okay? Because I told you that I look at balance sheets. So what we'll do here is I've got Camtech. This is information from the balance sheet, okay? And what I want you to see here is if we look here where it says assets, okay? We've got assets over here and liabilities over here. So what I look at is I want to see that the assets are growing over time. And the liabilities I'm not too concerned of because any company is going to have some liabilities. You know, they all buy equipment or they all have to pay people for different services or different products. But I don't want the liabilities to be growing steeper every year. So what I look at is the assets. So their assets in 2020 were $288 million. And then they grew them in 2021 to $584 million. And then you can see in 2022, they grew them to 617. So the assets are growing. And then I look here to the total current liabilities, and those are pretty much stable here. They were a little smaller in 2020, but this was a smaller company then, so they had fewer liabilities. But then it went 89.7, 88.5. So you can see the liabilities are not growing astronomically. And in some companies, the liabilities do increase. So what I'm going to do is just show you, so this is Camtech. I'm going to show you a company for comparison. So here's Rivian, okay? And I will just show you the same stuff with Rivian, okay? So if we look over here, the current assets are right here and the liabilities are here. So in 2021, their assets were 18 billion 559. And then the next year, the assets were reduced to 13 billion. And then last year, they were reduced to 12 billion. So you can see that what's happening is all of their money or their assets, a lot of this was probably money that was invested into the company, is being reduced. They're spending their money, they're spending their assets. And then at the same time, if we look at liabilities, their liabilities were $1.3 billion in 2021, and then they went to $2.4 billion in 2022, and then in 2023 they went to 2.6 billion. So their assets are being reduced and their liabilities are increasing. Now, this has happened with other companies. Sometimes companies go through periods like this where they're burning through their assets, they're burning through their cash, and they're building up debt. This can't go on forever. So it could be that Rivian will turn things around in the future, but this is not, in my view, this is not an investment. This would definitely be a speculation. This would be something you would put some money into, hoping it might go up. But to me, for this type of portfolio, as I mentioned, I'm looking for companies with earnings growth. And if we go down here to their earnings per share, you can see all of these earnings, these are all negative numbers, meaning they aren't actually profitable. So they've actually been losing money. And so anyways, that's just kind of a start here. And now to show you, to cleanse the palate from a company burning through its assets and increasing liabilities, I'll show you one other stock. I invest in this one. It's one of the 10 stocks. This is Nova Limited, and the ticker is NVMI. Fun fact, little piece of trivia, is the company, you might say, why is it NVMI? Because there's no MI in here, it's Nova. And that's because the company used to be called Nova Measurement Instruments. Nova Measurement Instruments, and they shortened the name to Nova, but their stock symbol still had the MI for Measurement Instruments. So anyways, or measuring instruments. So let's take a look at their assets, okay, and their liabilities. So if we go down here to total assets, you'll see 2020 they had 655 million, and then they grew them to 805 million in 2021, and then they grew them to 984 million in 2022. They don't have the numbers here for 2023, but as you can see, assets are growing. And then when we look at liabilities, they had fewer in 2020. Again, it was a smaller company then, but the liabilities went to $288 million, and then they reduced them, which can happen for a variety of reasons. But anyways, I like to see liabilities either remaining steady or declining, which is the case with Nova. So I'm going to go here. We looked at Camtech already as far as market cap and as their earnings. Let's take a look here since we just mentioned Nova. Nova Measuring Instruments, NVMI. This company also happens to be based in Israel, just like Camtech. The market cap is 4.98 billion, which is again between the 1 billion and 8 billion that I aim for. And if we scroll down to earnings, you can see that the earnings are on a trend upward. So, and they're also positive. I mean, some companies are negative earnings, like they're losing money, but the trend is upwards, like we're losing less money. But I really don't like to invest. I don't think that's investing if the company's losing money. So I like to see that they're positive, they're profitable, and the trend is that they're increasing their earnings. We'll take a look here. This is Photronics. It's another company I invest in. We can look, the market cap is 1.79 billion. So that again is between 1 and 8 billion. And if we scroll through here, we'll see it's a little bouncing around as far as their profitability, but they are profitable. You can see this is in the green, and it looks like they had a really good fiscal year, fourth quarter, and then their first quarter of 2024 looks like it's not quite as high in sales, so they might be having a little slowdown in their, I should say, in their earnings. But anyways, that's that. And let's take a look at Aspen Aerogels. And this is a company that I also invest in. 1.31 billion. So the market cap you can see is very small, but it's not below the 1 billion mark. And as far as earnings go, they look like they are actually, this is a little surprising to me. They're a little bit in the negative here. Quarter 4 of 2022, quarter 1 of 2023, they're only slightly going up. And that surprises me a little because I've heard that this was a pretty hot stock before I ever invested in it. I just started this year. But it looks to me like they are slightly on the uptrend with earnings, but I know that their balance sheet is in good shape, and that's the reason that it made it into this portfolio. We looked at Camtech, we looked at Rivian, and this here is Nova. We did look at this as well, at the total assets that were growing. So I just wanted to show you here, this is the page from the Zoom call. I just accessed this on Camtech's website. I went to their investor relations, and this was just recently that they had their conference call, so I tuned in. It's free, it's easy, you just sign up for it. Here's a page that I got recently. I was just researching Rivian, and you can see it says here, analysts expect the company to report earnings per share of negative 1.32 on revenues of 1.26 billion for the quarter ending December 31st. So just to show you that some companies actually have negative earnings per share, and that's another way of saying that it's unprofitable. It has a negative profit. So I like the car company. I'm hopeful that things work out well for Rivian, and but I just want to use this kind of as an example of loss of profit or negative profit, because this is the kind of thing I want to avoid in my semiconductor stock investing. And so looking through here, one of the things I look for is competition. Number 4 was competition. So this means I want to know who are the other players in a sector. So when I'm looking at Camtech, I want to know, well, what are the other companies that are trying to get their customers, that are trying to sell machinery? In this case, it's capital equipment for metrology and inspection. So who are the others? So what I did was I just go over to Google and I type, who are Camtech's main competitors? And different articles cite different things. I'm seeing here it says the main competitors of Camtech include Nova, which is NVMI, and Iridium Communications, Axcelis Technologies. I happen to invest in Axcelis. And then this other one says, we have to keep in mind, this is 6 years ago, but it said our main competitors are Onto Innovations, and I don't know who's talking. I'm guessing this might be Camtech. I can click on it and we'll see. Yeah, this looks like a Camtech publication, but I don't know. I'm not going to put a lot of stake in that. But anyway, I think it's just worth it to kind of look at who are some of the other competitors. Similarly, I typed in who are Nova, NVMI Limited's competitors, and it says the main competitors include Camtech, and they name a whole bunch of other companies here. So as you can see, I was aware going in that Nova and Camtech are competitors, and so I don't think it's a bad thing. I just think, hey, this is interesting. They're two small companies. They're both in the semiconductor, metrology, and inspection space, and I'm hoping both of them do well, but I don't know really which one's going to be better. So what I did was I just bought some stock in both, and that's just sort of how I approached that. But they look like they're both well-run companies, and they kind of pass through all my filters. So that is pretty much everything that I can think of to share with you guys, at least in terms of like the initial steps I take. And I'm happy to just run through them with you guys again, just so you kind of have an idea of what I look at when I'm coming up with like a portfolio. So the first thing is the company size between about $1 and $8 billion. I want to have a balance sheet where the assets are growing and the liabilities are kind of stable or declining. I like to have earnings growth. I like to know where they are as far as competition goes. Are they the fast growing with the best kind of technology and they're taking market share from larger players? Or are they the largest player in their sector? You know, I just like to understand the competitive forces within the sector. And then I want to know, is the leadership have a lot of talent and integrity? I like Rafi Amit. I heard him talk during the fourth quarter 2023 earnings call for Camtech, and I just liked what he shared, and I liked the way he delivered the information, and he just seemed to me like somebody that I'd want to invest alongside. And then the other thing is intelligent speculation. I try to remind myself I don't have to be perfect on each of these stock picks. The idea is not to be dependent on any one speculation or any one risky investment, because if you do, you're in trouble if you made a bad decision or you got unlucky. But if you put them together in a collection, then they'll kind of offset, and hopefully if you make more good decisions than bad ones, the good ones will more than make up for whatever bad decisions or unlucky situations you might have inherited. And finally, simplify. You know, I think the one mistake, I can personally speak from experience, the one mistake that I have made as an investor is sometimes buying stock in a company where I just didn't understand it that well. And I should have just said no. I just said like, nope, let me just say pass on that, and I will stick to something I understand. And I think a problem that a lot of investors have is that they try to understand too many things and they don't know the edge of their own competence. They don't know where their knowledge ends, and they just start to reach. They just start to buy stocks that are exciting, or that somebody else talked about online, or that somebody talked about wherever, and they just get excited about it. But they don't really understand the business. So with each of the companies that I invest in, you know, I've probably spent many hours looking at it and thinking about it, and just I throw away the ones that are too hard. I just eliminate them, but it actually makes life easier. It's like taking the clutter. If you're trying to clean up your room and you got like a mess, and sometimes you just got to go through and just throw away all the stuff you don't need and don't want, and then you're left with the things that are meaningful, that are important to you. And when I build a portfolio, I just try to do the same thing. I try to keep it simple and stick with the stuff that matters, stick to the things I understand. And I think that, at least for me, has helped me to build a portfolio that's really easy to kind of stick with and stay with and be acquainted with, because it's not too big, there aren't too many companies, and I can follow them, you know, from week to week and month to month. It's not too hard. It's not like juggling a huge portfolio. It's very simple. I can look at it in one glance and, you know, hopefully learn a little bit about each of these companies as the years progress, so that I have a better understanding of whether they're growing, continuing to grow, continuing to innovate, and, you know, in the process of learning about them, I might get some new ideas for future investments. So that's everything I've got for you today. Hope it was useful, and you know that it gives you some ideas of things to look at when you're considering a company. This is not the fast food of investing. This is really just like the springboard from which you can kind of jump forward. It's kind of the basis. That's what I would say. It's like a foundation. And a lot of investing, you know, the best investors tend to be really good at learning, and they spend a lot of time learning about businesses, because that's what this is all about. Each of these stocks is not just a little thing that wiggles around that you can follow during the course of the day and see if it goes up or goes down. These are actually businesses, and when the businesses grow their earnings, when they're successful as they grow, build their assets, and build their profits, the stock price tends to go up as well. So the more you can understand the underlying business, the better off you will be as an investor. So thank you so much for watching. I hope you enjoyed this. If you have any questions or ideas or whatever, put them in the comment section. I always love to hear from you guys. And I will see you in the next video.